I'd like to welcome to the show Fred O'Riordan of Ernst & Young, Jake Fuss of the Fraser Institute, and Tim Cestnick of our family office and a regular columnist with the Globe and Mail. Fred O'Riordan is the national leader tax policy at EY Canada. He plays a significant thought leadership role with E&Y on global tax policy and tax controversy. And he also works with companies to work effectively with the Canadian Revenue Agency. He joined E&Y in 2010 after a 33-year career in public service, which includes 20 years experience in senior roles with the CRA. Welcome to the show, Fred.
Thanks, Phil.
Jake Fuss is the director of Fiscal Studies for the Fraser Institute. His research covers a wide range of policy issues, including government spending, debt, taxation, labor policy, and charitable giving. He's also written commentaries appearing in major Canadian newspapers, including the Globe and Mail, Toronto Star, and National Post. Welcome to the show, Jake. Thanks for coming out.
Thanks for having me on.
All right. And Tim Cestnick is the co-founder and CEO of our Family Office, Inc., as well as the author of Regular Tax and Personal Finance column in the Globe and Mail. His firm, Our Family Office, provides strategic offerings and wealth advisory services to ultra-high net worth individuals and families. He's also an author with multiple best-selling books. Welcome to the show, Tim.
Thanks, Alan. Glad to be here.
Excellent, excellent. Thank you so much, gentlemen, for agreeing to come on our show. And, I guess everybody, or the number one thing I hear from most investors that I deal with is tax, right? Everybody's looking to save tax, whether it's on an annual basis, whether it's trying to provide or I guess have their estate transferred to the next generation, to their beneficiaries in the most tax efficient way. Tax is on the minds of all Canadians, and there's obviously a reason for that. The levels of taxation, especially in Ontario, are one of the highest in North America, and we know this. And I guess recently we heard the concept of tax fairness. We heard this idea and a lot of talk about this earlier in the year in Canada when the federal government raised the tax levels for capital gains, the inclusion rate for capital gains tax. And most recently, we've actually been hearing it down south, our neighbors to the south, with Vice President Kamala Harris talking about if she was elected as president, what she would do to raise tax, corporate tax, individual taxes. And again, this whole idea about the wealthy, certain segment of the population, the higher income earners, just not paying their fair share. So I thought that's where we would start. So I guess my first question to the three of you is, what does tax fairness mean to you? And do you think the wealthy don't pay their fair share of tax? And I guess we'll start it off with Fred. What do you think about tax fairness?
Well, for readers who read the Globe and Mail, I guess you probably already know my opinions because they're on the record. I wrote an opinion piece earlier this summer about this, whether the wealthy pay their fair share. Tax fairness means different things to different people. I mean, that's the first thing to start with. So you're never going to get a consensus across the board on what is fair. But if you look at our progressive tax rates in Canada, and particularly those that impact the wealthiest individuals, in 8 of 10 provinces, they're all over 50%. And my piece keyed, it was really triggered by a commentary around the 24 federal budget, where there was this suggestion that middle income people are paying higher marginal tax rates than the wealthy. And that's only true if you compare apples and oranges. In other words, capital gains with regular employment income and so on. Taxes are confidential, so we can't look at individual tax returns in the general public, but Statistics Canada does publish aggregate tax data. So that's the source that I used for that opinion piece. And just to quote one statistic out of several that were there, the top 1% of Canadians at the highest marginal tax rate pay about 22% of all personal income taxes, and they only earn 10.4% of all income. So that gives you an idea of how steep the progressive tax rates are in Canada. I would say, in addition to that, sure, there are wealthy people who don't pay their fair share of taxes. There always will be. There are middle income people who don't pay their fair share of taxes. Tax compliance is a problem across the board. I would think that it's probably similarly problematic at all income levels and thresholds and so on. So you're always going to have some element of wealthy people who don't pay their fair share. But overall, yes, I would, in my opinion, the wealthy are certainly paying their fair share.
Paying their fair share. You know what? The way I look at tax fairness, Jake, is for me, when they're talking about making taxes fair for everybody, you usually hear, okay, someone is not paying enough tax, so they should pay more. And yet someone perhaps is paying too much and therefore should pay less, kind of even the playing field. But as we know, they're not going to cut taxes for individuals. They're only going to raise tax on the higher income earners. So what does tax fairness mean to you?
Yeah, I mean, similar to Fred, I mean, I think there's many different definitions of tax fairness, but the one I usually use is the relationship between income and taxes. So we can kind of think of as your income rises, generally, so too should your taxes. Now, whether that's in proportion to your income, or a more progressive system where the tax rate increases even higher as your income rises. I think that's where a lot of the debate goes to. But for me, I think when we're talking about this issue, I think, similar to what Fred was talking about, we need to be grounded in the facts about, how much different income groups in Canada are actually paying in taxes already. So what we calculate, for instance, is that the top 20% of income earning families in Canada are paying about 54% of all taxes in Canada currently. And they're paying about 2/3 of all personal income taxes, largely due to the progressive nature of the tax system currently. And I think that's really the frustrating part for me in the conversation. When we have these debates about fair share of taxes, it's not usually rooted in actual definitions of what actually constitutes a fair share. They just say, high income earners have to pay more. And really, it's not grounded in any baseline or any facts or truth on the matter of how much they're currently paying. So in my opinion, generally, when we're looking at the distribution, the top 20% of income earners in Canada are actually the only ones that are paying a higher share of the total tax bill in Canada relative to their share of income earned, because they're earning about 46% of all income in Canada, but they're paying about 54% of all taxes in Canada. That generally seems, fairly fair from that standpoint. So I think that's really the frustrating part for me in a lot of this conversation and debate.
Yeah, and Tim, what I did recently, interesting enough, is I had some work done on my house, and I went to some of the individuals that were working on my house, and I asked them, and I don't know where they sit, which bracket they sit, tax bracket they sit in terms of income, but I said to them, I said, when you think about taxes and this idea of tax fairness, are you bothered or upset by the fact that perhaps someone who earns more is perhaps not paying as much tax because they're, having their income flow through a corporation or perhaps doing some other thing? And it's funny, the reaction I got from this individual was, no, I'm not upset. If I could do it, I would do it too. So this whole idea of our government trying to talk about tax fairness and trying to raise taxes and saying it's because we need to level the field for everybody that is paying tax. What do you think about that? Why does our government continue to go to the higher income earners and say they need to pay their fair share when, as we've just heard from both Fred and Jake, that they are paying their fair share?
Well, yeah, it's a good question. I think the answer is a political one, right? The government, it seems more politically correct to target higher income earners and suggest that they're not paying their fair share, and therefore appeal to the masses or the average Canadian who probably assumes that if you're making a lot of money, you're not paying their fair share. But as both Jake and Fred have suggested or have shown, the stats show otherwise. In fact, I think my big concern here is when the government says they're not, wealthy people aren't, or just higher income earners just aren't paying their fair share. As Jake said earlier, what does that mean exactly? Can you define what their fair share should look like? Like, let's talk about what is enough. How much is enough tax to pay? And then, have a debate about that. And then, if Canadians aren't paying enough, wealthier Canadians aren't paying enough, then by all means, let's work towards what they should be paying. But I think what you're going to find is when you see the proportion of personal income tax and just total taxes that higher income people are paying today, people would say that's enough. And another stat, which I know we're talking about statistics here, the bottom 20% of income earners in Canada pay just 0.8%, less than 1% of taxes. So there is a progressivity to our tax system. That's the way it's been designed. And by the way, as somebody who works day to day with some of the most affluent families in the country, they would all say, without question, that they're okay to pay more tax than someone who makes a lot less than them. They're not debating that. Nobody is saying that a progressive tax system is a bad idea. Many people would say, look, if I make that much more, then I should pay a higher percentage of my income in tax. But there comes a limit where enough is enough. So, currently the highest marginal tax rate in Ontario, for example, is 53.53. It's a pretty high rate. And just to put that in perspective, and I know we'll probably talk about other jurisdictions, but put that in perspective, if you took all of the Canadian provinces and all the US states, and if you looked at the number of those jurisdictions, and that there are 61 of those jurisdictions, and you took the top 10 most highly taxed jurisdictions out of those 61 in North America, 9 Canadian provinces occupy the top 10 most highly taxed jurisdictions, and all 13 Canadian provinces, all Canadian provinces fall in the top 13 of those jurisdictions. So compared to the US, we are very highly taxed. So we can debate about what's the right number, but really let's define what fairness means in actual dollar and actual percentages. Let's talk about what fairness means, because I think we're there.
Yeah, and I think we're going to touch on percent that you should be paying of tax based on your income a little later, because I have some ideas on that. But it kind of takes me to I guess my next question. We'll ask Fred. The high income earners, obviously they're hearing about this term tax fairness. I know that Tim was saying that people that he talks to, clients, investors he talks to, they don't mind. But what do you think, Fred? Like, what do you think people are thinking, especially some of these high income earners? I've had lots of conversations of people that are quite upset about this, and what are the ramifications of continuously going to the well, as I call it, and asking these people to pay more?
Yeah, well, first, the first part of your question, how are they feeling? We get a lot of feedback from high income earners as well as you guys, and I think the overwhelming feeling is feeling underappreciated and targeted. I think it's not because they don't feel they should be paying the amount of income tax that they're paying, because after all, they're successful. So everybody feels as if they should contribute back to people who are more deserving in terms of the income scale. There are other ways for governments to redistribute income. They shouldn't be relying solely on the Income Tax Act, as an example, on personal income tax. As for the second part, concerns, I guess most of them, and a lot of us as practitioners are concerned that going back to the well could mean increasing the tax burden at that level even more. And one example, of course, was the increase in the capital gains inclusion rate this budget. The worst thing would be to increase marginal tax rates at the top, or create a new threshold income level and a new rate and so on, as was done in 2016. The reason I say that is, although it may have a political appeal, just think about it. What you're doing is, if your claim is that the wealthy aren't paying their fair share, all you're doing is incentivizing them to pay less, and more of them to pay less, because the return on tax avoidance or tax evasion increases as the rate goes up. The return on that behavior is higher. So the last thing you want to do is ratchet it up more. Arguably, you might get more tax revenue by reducing the rate. And I'm not going to go out on a limb and actually make that or stake that claim, but there is a certain logic behind that point of view.
Yeah, for sure. And Jake, I've been talking to some individuals, small business owners. I've actually had some friends, acquaintances, 3 of them in the last 12 months actually pick up and leave Canada, move down to Florida. We've been hearing that a lot about that lately, going down to Florida. A lot of people from New York moving down to Florida as well. People are moving to where they're going to pay less tax. I know, former CEO of Amazon, Jeff Bezos, moved from Seattle area, Seattle, Washington, down to Florida. And then he went off and sold off a whole bunch of shares of Amazon, saved hundreds of millions of dollars in tax. So, to me, that is a big ramification of continuously going to the well and trying to raise tax on these individuals. What do you think there, Jake? Have you come across or have you heard of people, going to that drastic measure to actually pick up and leaving the country? I have heard a few.
Yeah, absolutely. I mean, the empirical research is very clear on this. High skilled workers are highly sensitive to tax rates in particular. So they're going to locate themselves in the jurisdictions where they can, minimize their tax bill or, pay less than they would in another jurisdiction. I mean, just even anecdotally, we can even look at, with sports superstars, for instance. A lot of them have the advantage of going to Florida or to Texas where they pay no state income tax. It's a lot more attractive to those superstar athletes to be there than it is for them to be in Toronto or other Canadian jurisdictions where they're paying considerably higher, millions of dollars more in taxes than they would in those states. Never mind the other advantages from weather or other things as well too, that might attract them to those jurisdictions. But I think that's really the big problem here right now is that, Canada is a global competitor for people that are highly skilled workers. And the more that we make it more difficult for them to locate themselves in Canada, that just makes it harder for us to attract and retain those immigrants that come to Canada, but also retain the people that are already in Canada. So they go down to Silicon Valley, Texas, Florida, other areas where they think they can earn more, have a higher standard of living. And at the same time, too, by raising tax rates on marginal income for top income earners, we offer this disincentive for them to invest and to be in Canada as well. So we don't get as much entrepreneurship. We don't get as much working, saving, investing, all the things that we need more of in Canada to be more productive and ultimately to get those economic growth gains that actually allow people's incomes to rise over time. All we're doing right now is really disincentivizing a lot of that productive economic activity.
Actually, along the same lines, Jake, we work with a lot of affluent families, and higher income earners have the means and the ability to move wherever they want to, really, and many, in fact, already have homes in other parts of North America or other parts of the world. And so it's not difficult for them to get up and just move someplace else. In some cases, the only thing that keeps them in Canada really is the connection to family. And I don't want to downplay the importance of that connection and the importance of that. But if that's the only thing that's holding people back from moving, we have a problem. There are people who create businesses and decide to create businesses in Buffalo rather than in Southern Ontario, because either corporate taxes are lower or personal taxes are lower. That's problematic for our economy. For creating jobs and GDP per capita, it's just not good.
Yeah, and actually, again, Tim, you're good at leading me into my next question. So let's start with your productivity. Bank of Canada, right? We've heard from the Bank of Canada recently talk about our productivity and the fact that it's, GDP over 2% last reading. It's kind of being masked by all the immigration coming into the country. And there's a lot of talk about productivity on a per capita basis, and we're actually one of the lowest, if not the lowest, in the G7 right now. And again, talk out there from CEO of Royal Bank talking about this very thing about taxes, that we need to look at the Income Tax Act again, because the way I look at it, it's definitely hurting our productivity. It's definitely hurting businesses, to be more productive, to be more efficient. For workers to actually want to work more hours. I talk to people all the time in the factories, and they say, why would I work time and a half? That extra money I'm being paid just goes to the government. So they don't even want to be there extra time, which obviously hurts a business. So what do you think about taxes and productivity? Obviously, they're related, are they not?
Yeah, for sure. And besides that, I mean, I think if we're going to improve productivity in Canada, we need investment. We need investors to invest money in businesses here. And who wants to bring your money to Canada to invest here with rates of tax that are as high as they are? It's not easy to attract investors. Or attract investment, and that's a big problem. So, you can believe what you want about how much tax higher income people are paying, but there needs to be a better thought out plan than kind of shooting from the hip when it comes to just trying to increase the wealthy at higher rates. And I think what we've seen over the last 2, 3, 4 years, maybe decade even, Alan, is this government in particular bringing out changes in tax legislation that they haven't thought through very carefully. We've seen that they've constantly they introduced changes to the capital gains rates, and then of course that became effective June 25th of this year, and then they discovered there were problems with the legislation after that. And in fact, they announced the changes and the deadline before they even came out with the legislation. So, it's like ready, aim, fire. They're not thinking through some of these changes very carefully, including the implications on investment in Canada and what that means for our economy and our GDP per capita and all kinds of other metrics.
And great points. And Fred, in terms of obviously higher taxes here, as all of you mentioned, compared to a lot of the other jurisdictions in North America. So Fred, do you think this is hurting us in terms of competing against the United States for foreign money for business? Do you think this obviously lack of productivity per capita basis, is this holding us back against other countries that we're competing against?
So there's a fair bit to unpack here when we talk about productivity, and particularly labor productivity. So I would sort of pull it back a little bit and sort of start by recognizing that our sagging labor productivity, which is a huge problem, I think it's the most important economic issue and challenge in the country. It's a function of not enough capital per worker. In order to raise labor productivity, we've got to look at more investment in non-residential structures, infrastructure, IP, and so on. We spend a disproportionately high amount of our capital on on housing, and that's pretty well established. So, in order to encourage more investment, tax is one factor, but it's not the only factor. So I know we're focusing on tax, but we shouldn't forget that there are lots of other things in terms of public policy. There needs to be a better alignment of a variety of public policies and regulatory policies and so on to attract that capital to Canada. If we look specifically at taxation, we've talked more about personal taxes than corporate taxes. Personal taxes are definitely a problem, as Tim has gone into some detail to explaining. I don't need to do that. On the corporate side, we're actually relatively still competitive. I'm not suggesting that there's not room to improve on the corporate side, but if we look in particular at the marginal effective tax rate on capital, so you won't find that in the Income Tax Act for readers. I mean, this is a construct that we economists use, basically looking at how much tax there is on the last dollar of investment and so on. We call it the marginal effective tax rate, or the meter. We're in most sectors, we're relatively still competitive with the United States, our main concern and our main competition. Our competitiveness has been reduced. U.S. tax reform cut away a lot of the tax advantage that we have. So we do see a big impact there. And our meter is probably going to deteriorate further because there's a lot of accelerated cost measures, capital cost allowance measures and so on that are set to sunset. So we'll have to see what the federal government does. We'll have to see what the U.S. does on their side too, because they've got a lot of incentives that are temporary in nature. So I do agree. I think all of us are probably going to be in violent agreement about the importance of tax, but we shouldn't ignore a lot of the other things like interprovincial trade barriers, difficulty starting projects, environmental assessment legislation that is cumbersome and slow, and so on.
Yeah, I know you bring up great points. A lot of other things to consider. Hey, Jake, one of the things I talk about a lot is with the kids. Our kids growing up, kids that are going to universities, that are coming out of university looking for jobs, and to them looking at where they're going to set up shop. Right, they come out of university looking for a job, looking to start working a business. I just worry at times what this says to our younger generation. I know, talking to a few individuals, and it's actually heads of companies that have their kids in schools outside of Canada, and they're not coming back. They're staying in jurisdictions that they think are better for themselves going forward. So, what does this say to our kids? What does this say to the younger generation? If you do well and you're successful, well, the government's going to take 53 cents on the dollar and you get to keep 47. Again, all flows into this idea of efficiency, productivity, just being a better country, a better place to set up work and job. What are your thoughts on that?
Yeah, I think it's a huge problem right now in Canada. I know there's a lot of frustration, especially among young people, because they can't afford homes. They can't get the jobs or incomes that they want, especially in proportion to the size of the mortgage that they have to take on. So I think this is a huge problem, and I think Fred would absolutely hit the nail on the head there too. It's not just a tax issue; it's also a government regulatory and policy environment too that's not conducive to growth and not conducive to people getting these jobs that they want. And then, there's so many barriers in the housing sector, for instance, that the governments have imposed that have made it difficult, whether it was on zoning laws, developer fees, or other things that have just really added to the bill of the cost of building housing as well, which is just adding to the frustration of younger people in particular, because they can't afford those homes. And a lot of new immigrants who come to this country can't afford the homes too. So it just really sets up this vicious circle, where we're getting into deeper and deeper problems. And the answer from a lot of governments has been to double down on the same policy approach, maintain the status quo, rather than actually making broad and bold policy reforms that we need. Things like interprovincial trade barriers getting removed, regulatory environments that is not conducive to business investment, that's not conducive to building projects that we desperately need in Canada. And then also on the tax file, I mean, making changes like increasing the inclusion rate on capital gains. Well, the only thing that's likely going to do is scare away more investment into Canada, or cause people to just lock into the current investments and not move that capital to more productive uses as well over the long term. So I think there's a lot of frustrations with the current policy direction in Canada, and we need to start rethinking these things so that young people are allowed to stay in the country, and actually have that job growth, income creation, and more affordable housing for them over the long term too. We just can't keep going in the same direction that we're going now.
Yeah, no, again, great points. I guess for our last conversation piece or topic, wanted to throw something at you guys, and something that I talk about with certain individuals, and it resonates whether or not it's possible. I understand the government has to generate revenue. Obviously, the government needs to pay for things. And in talking to the premier, had him on our show not too long ago, he said that the governments they don't have a revenue problem, they have a spending problem. And he was very adamant on that. And he actually said he wouldn't be raising taxes anytime soon in Ontario. So that was a good thing. But I guess, what would the three of you, think about a flat tax? Now, I understand there may be a lot of pros and cons to a flat tax, but wanted to end off our conversation today with all three of your opinions on a flat tax. Let's say we set a rate of 25%. So the person making 100K, they would pay $25,000 in tax. Someone making obviously 50,000 would pay $12,500 in tax. If you were to everyone pays the 25%, like you said, you would broaden the base, you would bring down taxes for some, increase taxes for other. Could that work? Could that in theory work? I guess we'll start with Tim. What do you think about a flat tax as opposed to having all these different tax brackets? A lot easier, a lot simpler.
Well, I think you hit the nail on the head when you say simpler. I think that's the argument for people who are looking or suggesting that a flat tax makes sense. It is simpler for sure, but I've never really bought into the idea that it's actually very practical or necessary. For one thing, like I mentioned earlier, most of Canada's higher income earners don't actually mind a progressive tax system. It's just how progressive is it, right? How high do those rates get? So I don't think a progressive tax system is necessarily a bad thing, and a flat tax is simpler. But what I think we do need to simplify the tax system is tax reform. We have not had a Royal Commission on Taxation since the 1960s, when the Carter Commission was established, and they came up with some pretty sweeping changes to our tax legislation at that time. And that's really what we need again. And that will help to, with the view of simplifying, make the system fairer if you think there are things about it that aren't fair, but to simplify it as well. I just don't really think a flat tax is going to be the right answer. I think you'll always come across scenarios where somebody needs a tax preference because of this or that or another thing, and you're going to get back to where we are again. So I'm not sure that's going to be a solution.
Okay. And Fred, why should paint this scenario for you? Someone goes to school, gets their degree, gets a master's, comes out making a good salary, good living, versus someone that perhaps, stumbled their way through school, got a diploma of some sort, and, really didn't put their efforts, maybe their education is not on par with the other individual, comes out as making less money. Why should the person who's coming out making well over six figures, why should they pay 53% tax? They worked their whole life, they since they were young, and they come out and say, you know what? I deserve it. I deserve to keep more of the money that I make because I earned it. What do you say to those individuals? Why wouldn't a flat tax then be the right idea?
Well, to those individuals, you'd be speaking to the converted, of course, because they would favor the flat tax because they would benefit more from it than people at lower income levels and so on. I mean, we've all sort of circled around the same thing. The tax fairness is difficult to pin down. It means different things to different people. So 53% is a pretty high tax rate. Anything over 50%, just psychologically, that's a high tax rate. I agree with Tim in the sense that I think most people don't oppose the idea of a progressive tax system. They recognize that they've got to contribute and they've got to help pull other people up by their bootstraps and so on. I mean, that's part of what it is to be a good citizen or a good Canadian and so on. I think to focus on flat tax though is sort of the extreme opposite of the extremely progressive system we have now. There are some other advantages of a flat tax. I mean, Tim mentions simplicity, and that's clearly the obvious one, but neutrality would be greatly improved. I mean, neutrality is a huge problem in the current tax system. All of these taxes have some wonky, aspect to them. Like the corporate income tax, people like it because they think they don't pay it. But we know a lot about tax incidents, and the corporate tax is either passed on to consumers in the form of higher prices, or it's pushed back on workers and suppressing wages and so on. So incidence matters, neutrality matters. There's a lot of investments that don't go to the best use because of the tax incentives that are baked into the system. Some of them intentional politically, and some of them unintentional. Even the income tax in general is a terrible tax base. We'd be better off putting more focus and emphasis on consumption. We earn about in this fiscal year, I think about 56% of all taxes are personal income taxes. About a quarter, maybe 24%, 26% on corporate taxes, and the HST is down around 13% or so. I mean, it would be politically difficult, and most politicians prefer to lower that rate than increase it. But that's the kind of thing. I mean, so there's a lot of scope for improving the tax system. I would love to see a comprehensive tax reform. I wouldn't oppose a flat tax, but in all of those thoughts, I just don't think there's a political will to do it across the political spectrum. I mean, tax is kind of kryptonite for a lot of politicians when you look at significant important tax reforms.
And I think talking to again hearing some of the people on the conservative side on the federal level, I think they're planning on taking a look at the Income Tax Act. Perhaps if Mr. Poilievre comes into power, maybe that's something he will do. I think I thought I've heard somewhere that looking into perhaps taking a look at that, and when he's if he becomes elected and is the next prime minister, what they will do. I guess a lot of people are waiting to see if he'll return the capital gains inclusion rate back down to 50%, or will he leave it at the new proposed rate? I think that's the first thing he's going to look at. But I guess to end with yourself, Jake, what do you think? Do you think, obviously, it sounds like Tim and Fred are kind of, flat taxes on one side, progressive is on the other. Maybe something in the middle makes sense. What do you think? Do you think a flat tax can work, or do you think it's got to be, something in the middle between the two?
Yeah, I think it's a good conversation to have. I mean, I agree with Tim and Fred in the sense that I think we definitely need a tax reform in this country, looking at the tax mix in terms of, GST versus, income taxes and corporate taxes and how that looks. That's definitely way overdue. We haven't had a proper commission on that in a long time. So we definitely need to have that discussion. On the flat tax issue, I'm generally in favor. I mean, if we look at Alberta, recently had a system where they had a 10% flat tax, and they also had a 10% corporate income tax. So they were actually treating it equal across, to Fred's point about neutrality, and a dollar is a dollar essentially. Another country as well to look at is Estonia. So they currently have a flat tax across the board for their sales tax, for their income tax, and for their corporate tax at about 20%. And I believe it's actually going up to about 22% soon. But they're a very successful country, even though they're not a very well-known country in terms of their economic progress over the last 30 years or so. They have one of the highest business startup rates in the world, one of the highest in Europe. They also have a very robust economy in terms of productivity growth, very good education system and other things as well. So I'm actually generally in favor of a flat tax system, mainly due to making it a more simpler system, so that you're not punishing people as their income rises and they're being more productive in the economy as well. Because right now there is a bit of that penalty with the progressive system, whereas you earn more money and more of it gets taken away by the government, for instance. So I do think that's something that we can look at. And part of that discussion too would be getting rid of a lot of the tax credits and exemptions in the system to make it a lot more simple, so that you're treating every dollar the same. And I think that's the really important point when we're talking about flat tax systems.
Yeah, I guess for me, I'm with you, Jake. I guess a lot of my clients would love to see a flat tax. I know Tim and Fred bring up points why perhaps may not be the right way to go, but you mentioned a few jurisdictions where it actually is working. So good to hear. Maybe our government needs to take a page out of some of these other areas. But yeah, hopefully we've today uncovered, or at least gave individuals something to think about with regards to taxation, and hopefully the powers that be, the federal government, provincial government, can take some ideas or take something away from some of what you said today. And perhaps we can and will see change, because as you all mentioned, I think last time I heard we were the fourth highest jurisdiction for taxes in North America, and I'm not sure if that's changed recently, but that's pretty high. And I know people living in Ontario, I know the provincial government will say it's the federal government, and everyone unfortunately lays blame somewhere else. But overall, we're paying a lot of tax, and I'm sure those in BC would say the same, in Quebec, et cetera. So I want to thank all three of you for joining me this afternoon. It's been a pleasure. Nice to meet all of you and to speak with all of you. I hope all of you come back on our show at some point in the future. Again, I want to thank Fred O'Riordan, Jake Fuss, and Tim Cestnick. You've been fantastic and giving us all food for thought, and talking about what I think is the point of contention for all Canadians. I think all Canadians feel as though our taxes are not up to date. Like Tim said, we haven't looked at the Tax Act and taxation, how it's done, in quite some time. And I think hopefully our government will take a look at that going forward. So once again, thank you, gentlemen. It's been a pleasure, and thank you again for sharing your insights with all of us. Thank you.
Thank you.
Thanks, Alan.
Thank you.